the gas space, the oil and gas space. And this because the Natural Gas Regulatory Authority is looking to amend its tariff regulations. It's invited industry suggestions for the same as well by the 11th of April. To discuss this further, we are now joined exclusively by the member at the PNGRB, the Petroleum and Natural Gas Regulatory Board, Mr. Gajendra Singh. Thanks a lot, Mr. Singh, for taking our call. And, that's absolutely the first question. Can we expect an increase in tariffs for gas pipeline following the changes that you've made in this, like the claim of price for contractual LNG, etc.? Because that's what the street is expecting right now.
The PNGRB board's focus is that how we can make the gas uses, how we can boost the gas usage all across country. Particularly the unified tariff, what it was particularly in existing, currently have the 3 zones. Now we want to make it a 2 zone, and in zone 1 tariff, that will be applicable to all CGD all across country. Because the CGD entity, what we are seeing, the growth is, annual growth, if we see, it is 11 to 12%. So our focus is that the CGD entity, which is far-flung area, may be paying a zone 3 tariff, which was very high, 105 plus, and the zone 2 tariff is 85 plus. So all those entities, now they will get benefited. They will get basically the zone 1 tariff. And the 3 zone now get converted into 2 zones. So the focus is that how we can increase the gas usage all across country, because the focus is for CNG and PNG. CNG and PNG, they will get benefited. Yeah.
All right, CNG and PNG will get benefited. I know you have a stated objective of taking gas to 15% of the energy mix by 2030, and these are steps in that direction itself. I have a 2-part question. One, would this lower prices for end consumers, or maybe this benefit could improve the margins for the company itself? That's point number 1. And secondly, are there any further regulatory reforms that we can anticipate in the very near future? What kind of feedback are you expecting from the industry?
No, like currently what we have seen, that we have taken a feedback. There is an industry committee. We have taken their inputs. Based on that, this public consultation document now have published. Now we will take the comments of all stockholders, all stakeholders, whatever the consumers or the supplier or the traders, everyone will, they will give their comments. Based on them, then we will finalize what all basically is to be, there will be in final document.
All right. And the volume assumption, relaxation beyond the 75% threshold, could you elaborate a little about, on the thinking about this, behind this move?
Yeah, but like normative volume, we were taking 75%, but there are the few entities, or there are the few pipelines where it is flowing more than 75%. There we are seeing is whatever the excess volume will be there beyond 75%, the benefit will be passed on 50% to the entity, 50% to the consumers. So that way also there's a thought process that if it gets through public consultation and all other things, then we will take this to the final regulation.
Right. And, I'm looking at a couple of expert notes, analyst notes, and one of them is CLSA, which points out that industrial gas users might actually see a cost hike. Should industries base for higher gas prices, or do you think the long-term benefits will outweigh the near-term costs?
No, I don't think there will be a very big change into the tariff, because what we are saying, there are the number of industry customers which are falling in zone 3 and zone 2, maybe paying the higher tariff. Or even if you see the consumers which are there in zone 1, particularly say if you take a consumer of Gujarat and Maharashtra, where they are near the source, but they may be taking a gas from different other places. Like if you're taking a gas from KG Basin, so for them it is a zone 3. The volume in Gujarat is not that they are taking only for zone 1, they are paying only zone 1. They are paying even zone 3 for the volume which is coming from KG-D6 basin, or other document or other volumes which are coming from other sources. So in one particular area, whether it is Gujarat, whether it is Maharashtra, which are near to source, it's not like that they are always paying zone 1. So, and on the Zone 3 side, the entities which are far-flung, which are paying a tariff of Zone 3, 105 rupees plus, they will now have to pay, particularly for CNG, PNG, they have to pay the lower tariff. But yes, as you are saying, the Zone 3 now will come down. Zone 3 will get benefited. Zone 2 will be almost remain same, and Zone 1 will be slightly up. So that way the two tariff will be there applicable. That's what we have come out, and we'll see how it will go through after having a public consultation.
All right, and finally,
or loading to the industry consumers.
all right, and finally, if you could, to wrap it up for all our viewers, elaborate some of the major changes that you would like to achieve through these regulations. If you could give us one or two broad points, apart from, what we've discussed so far. One is claiming the LNG cost. The second is relaxation of volume, norms beyond 75%. And the third one, of course, is unifying the tariffs between Zone 3 and Zone 2 as well. Any other thing that we may have missed out on?
And only another thing is the isolated field. There are the number of isolated fields where there the tariff was basically, now these are the old fields, and what we are seeing, the pipeline which were laid there in those areas, they are not getting any returns on that. Somewhere the tariff is almost nil or maybe in a negative. So there we are seeing that at least they should recover their operating costs. So then isolated field, wherever the pipelines are there, and now they have volume is still existing from those isolated fields, so they will get a better tariff, particularly not to that to load to the consumer, but they should have an operating cost recovered.
All right, take that point. Thanks a lot, sir, for joining in and answering all our questions. We leave you with a promise that once after 11th April, you get all the industry feedback as well. You'll join us once again to tell us what was the feedback that was achieved and what were the changes that you had made to this policy as well. Thank you so much for joining us. The street is listening in to what you're saying. With that, we'll slip into a short break. Come